Mark Mahaney, Nothing But Net, 10 Timeless Stock-Picking Lessons from one of Wall Street's top tech analysts. Embark on a journey into the world of tech stocks with this comprehensive summary of a Nothing But Net, 10 Timeless Stock-Picking Lessons from one of Wall Street's top tech analysts by Mark Mahaney. The book offers invaluable insights into the unpredictable stock market, particularly focusing on high-quality tech stocks like Amazon, Google, Facebook, and Netflix. Learn effective strategies from a renowned tech analyst and discover the importance of revenue generation, long-term thinking, and focusing on key drivers like product innovation, total addressable market, TAM, customer centricity, and strong management. Dive into his key pieces of advice, valuable tips, and be prepared to face some setbacks along the way. Ultimately, this book outlines what it takes to become a smarter investor in the tech stock arena.
The uncertainty of tech stocks. Investing in tech stocks can be challenging, as even the top-performing companies like Amazon, Google, Facebook, and Netflix can experience significant market corrections. Unforeseeable global events can affect the value of stocks, and even experienced analysts like Mark Mahaney can make mistakes in stock selection. Investors must accept that there are no guarantees and be prepared for setbacks. In his 25 years as a tech analyst, Mahaney has learned strategies that can increase the chances of success, but there are still no guaranteed options in the world of stocks. Long-term investment success. If you're an investor, the temptation to play quarters and buy stocks based on short-term volatility can be strong. However, according to stock analyst Mahaney, this is a mistake. Successful investment is all about the long term. In order to accurately assess the value of a stock, investors need to look beyond short-term fluctuations and focus on the company's fundamentals. While short-term trading may seem exciting, it's not a sustainable or profitable strategy in the long run. Instead, investors should stay invested in companies with strong fundamentals, like Amazon, which has seen significant long-term growth. So, if you want to make good returns on your investments, think long-term. The importance of revenue growth for tech investors. In this book, Mahaney emphasizes that revenue is crucial for tech investors and suggests that they look for companies with at least 20% consistent revenue growth to ensure high-quality and high-growth stocks. Mahaney provides examples of two tech companies, eBay and Netflix, to demonstrate why revenue growth is a key indicator of a good investment. eBay was profitable but unable to maintain consistent growth, while Netflix sustained premium revenue and subscriber growth for years, leading to a dramatic increase in stock value. Mahaney also highlights the importance of successful growth curve initiatives, GCIs, in driving growth, such as new product launches, price increases, or expansions into new markets. However, Mahaney also notes that revenue growth is a result, not a cause, and identifies 4 key drivers of high-quality stocks, which will be discussed later in the book. Revenue growth drivers. The 2 key drivers of revenue growth are product innovation and total addressable market, TAM. Product innovation generates new revenue streams and enhances existing ones, with repeatable offenses for consistent success. TAM provides greater opportunity for premium revenue growth and competitive advantages, as larger scales lead to unique edges over rivals. Companies can increase their TAM through various means, including international expansion. Successful examples of the 2 drivers include Apple's annual release of new iPhones and Amazon's launch of Kindle, as well as Netflix's introduction of streaming and global expansion. Factors to consider when choosing a successful investment. Put customers first and look for strong management when investing in a company. When looking to invest in a company, it's not just about its innovative product or a large total addressable market, TAM. According to a book summary, there are other factors to consider, such as customer centricity, strong management, and even CEO attendance at Burning Man. Companies that prioritize customer satisfaction and put customers first tend to be more successful in the long run. For instance, Amazon's customer-centric approach helped it beat eBay and become the undisputed king of online retail. While eBay focused on pleasing investors, Amazon was willing to sacrifice profit to benefit the customer, which ultimately paid off. Good management is also crucial for a company's success, and it's easier to identify than you might think. Founder-led companies with a management team that has a successful track record, technical backgrounds, long-term focus, talent for product innovation, and an obsession with customer satisfaction tend to perform well. Amazon is an example of a company with strong management that ticks all those boxes. Interestingly, Mahaney, the author of the book, noticed that the CEOs of successful tech companies, such as Amazon, Google, Apple, Facebook, and Tesla, have attended Burning Man at least once. While attendance at the festival may not directly contribute to a company's success, it's a telltale sign of great leadership, which is usually an indicator of well-performing stock. In summary, when choosing a company to invest in, prioritize customer centricity and strong management as factors that can predict success. Logic-based tests in valuation. Assessing the current valuation for right stock picking. Investing in stocks is not a science and there is always uncertainty. While valuations are useful to a point, their importance should not be overestimated because valuation is an attempt to predict the future. The impact of COVID-19 has proven that valuations can be inaccurate as everything can change overnight. With so much uncertainty, many tech stock valuations can essentially be seen as fantasy valuations. Therefore, investors need to be careful with their approach while picking stocks. When considering valuations, logic rather than math should be applied to choose the right stocks. The main question investors should ask themselves is whether the current valuation seems more or less reasonable. There won't be precise answers. Assessing a company's earnings is crucial while considering valuation. For high-earnings companies, investors should assess whether the growth is sustainable. For companies with minimal earnings, investors should consider whether the situation will improve in the long run. Unprofitable companies can still be good investments, considering similar profitable companies with the same business model. The overall potential for profitability should also be assessed to pick the right stock. In conclusion, while investors can't predict the future, they can use logic-based tests to assess the current valuation and have more chances of choosing the right stocks. Wise tips for investing in tech stocks. This book summary provides practical advice on investing in tech stocks. The author suggests that investors should not be scared off by high-priced tech stocks and instead focus on the company's growth potential. The author also advises against day trading and investing in meme stocks and highlights the importance of research before making an investment. Despite the risks involved, investing in tech can be satisfying and rewarding.
In conclusion, Nothing But Net presents a comprehensive guide to understanding and investing in tech stocks, leaving the reader with a clear comprehension of the significant points and their relevance to the holistic message of the book. Mahaney's insights emphasize the importance of long-term thinking, revenue generation, and concentrating on core growth drivers like product innovation, TAM, customer centricity, and solid management. Additionally, he advises caution when interpreting valuation frameworks and urges investors to conduct thorough research before investing in any tech company. While acknowledging the inherent uncertainty and unpredictability of the stock market, this book provides valuable guidance for aspiring tech stock investors, urging them to learn and grow from both their successes and setbacks.